You're listening to The Whole Truth, a Resources Rising Stars podcast.
Patrick, you're about to start drilling any day, and I noticed that you said this week that the drilling will basically go through these trenches that you've been digging that have returned some very high-grade gold and silver results. On that basis, it would be like shooting fish in a barrel, wouldn't it?
It's a good way to put it, Paul. No, we've had some remarkable hits in these 2 metre trenches, 15 metres at, I think, 5 grams and in some cases over 10 grams. So we'll be drilling below these trenches and very confident we'll get some outstanding results in the coming months.
Now, when you say 2 metre trenches, they're 2 metres deep.
Yeah, they're 2 metres deep. So they tend to follow a sort of 100 to 150 metre length. And we're looking for sort of strike at surface, and that gives you confidence to drill underneath and get it evolves into a very efficient drilling program.
Now, bear in mind, you've already obviously done a lot of drilling at Limon. You've outlined extensive gold, silver mineralisation through those previous drilling campaigns. Why did you go from drilling to trenching? Conventionally, in an exploration program, you do the surface stuff, the trenching first, and then follow it up with the drilling. Why have you sort of drilled, and with much success? I mean, you've established, an exploration target of nearly, 1 million ounces to 1.7 million ounces. So it's not like you don't know that there's plenty of gold and silver there. Why go back to the trenching?
Yeah, look, I think the discovery was only made 12 months ago at Limon, so it's had a really rapid rise. Most of the drilling, all the drilling has been in this central chute. And as you said, we've had hits of sort of 250 metres at over 1 gram, 200 metres at over 1.3 grams. And the widths of these systems are over 125 metres. So really outstanding results. But it has been a difficult market. We have been preserving cash over the last 6 months, but it has allowed us to do these trenches and identify these areas that are over 1 kilometre from that central zone, which will now start drilling and work our way systematically back towards that central zone and ideally establish a significant large pit that's got high grade at surface.
So what you're saying in a roundabout sort of way, Patrick, is that the trenching is a cost-effective means of trying to close in on the better, higher grade mineralisation at depth. So when you drill it, you get a better bang for your buck.
Yeah, precisely. And look, we're very confident on Limon. It's sort of shaping up potentially as a sort of 100, 150,000 ounce mine once in production. We can build it for relatively lower capital than what it takes to do a porphyry system. We get into production at Limon, and that becomes a stepping stone to developing the bigger porphyry story that we have at Bramaderos, which once that's into production, that'll be a multi-decade mining operation at Bramaderos.
Let's look at that statement. You talk about 100 to 150,000 ounce a year operation. The parallels here are that this is going to become, Limon will become, you hope, one substantial open pit with a lot of parallels with WA operations, with WA gold mines.
Yeah, and that's right, Paul. You know my background. I was most recently at Red 5. I joined Red 5 4 to 5 years ago. We were 60 million market cap, and today it's a $1.6 billion market cap. And that was on the back of the success at King of the Hills that we built. But there's multiple examples. Another is Emerald, who's built a small mine in Cambodia, and that's a $1.5 billion company now. But we've got Limon, which sort of is in that scope, but that's a stepping stone to an even bigger story at Bramaderos, which is this gold and copper porphyry development that will be built in time, but Limon is the stepping stone to unlocking that huge value at Bramaderos.
Now, you've got two very different geological styles here, haven't you? Limon is a high-grade epithermal system that sits to the side and above the porphyry that you just referred to. Is that correct?
No, not quite. So there's a number of porphyry developments, systems that we have at Bramaderos. The first was Brama Elba, which we have a 2.7 million ounce resource. We do have what's quite exciting is a known porphyry system that sits under Limon that we haven't yet drilled out, but over time that will be put in deeper holes to establish if that's economic, but the scale of that underground porphyry at Limon. But what's different is Limon can be developed as a 2 to 4 million ton processing facility, whereas the bigger porphyry systems is more like a 20 million ton processing facility. So very different capex. But again, if we can get Limon into cash flow, generating revenues, generating profits, and with a much stronger balance sheet, then we're in a much better position to take advantage of that porphyry development story.
Now, Limon is as you say, a gold-silver discovery. When you made this discovery about a year ago, silver seemed to be very much the poor cousin of gold. How the world has changed. I mean, the silver accounts for roughly what sort of portion of your overall mineralisation thus far, do you think?
It's early days, but I do anticipate probably 15 to 20% of that Limon potential.
So it's a substantial boost.
Yeah, it's huge. So we're very lucky. We've got gold, copper, and silver, 3 hottest metals right now, and the fundamentals for each of those commodities is extremely strong. So we're well placed. 1, to attract more funding to progress and advance Limon, but 2, over time, build these bigger porphyry developments at Bramaderos, and we haven't even touched on El Palma.
Now, as you say, though, that they are very much the 3 hot metals at the moment. I mean, UBS came out the other day and said the gold price is about to boom. The boom has started by the sector. There's now no shortage of bullish silver recommendations. I see Canaccord published a note again the other day saying silver's heading for an almighty run on the back of its combined use both as a precious metal but now as an industrial metal, its role in solar panels and the like. So you've got the 2 trump cards there with gold and silver. So you sort of look at, say, okay, well, you've got an exploration target at Limon of, circa 1 million to 1.7 million ounces that this drilling is obviously aimed at putting into a resource category. Do you have a timetable? Take us through the start of the drilling in the next few days through to Christmas. What happens?
Yeah, look, we start drilling next week. We expect initial news flow coming through second half of July, and we'll continue drilling at Limon. Realistically, we'll have a resource middle of next year and likely wrap an initial scoping study around with that resource to give people a feel for the sort of longer term potential at Limon. And then there's a number of stage gates, pre-feasibility, feasibility study, and approvals. But we haven't. I look at Limon and I look at Bramaderos. It's a perfect postcode. There's no reason, nothing stopping us developing these projects. It's isolated. It's got highly supportive communities. There's low sort of intensity agriculture, sort of goat country. There's no protected forests or protected areas. No native forests. This is a perfect location to develop both Limon and the much bigger porphyry opportunity at Bramaderos.
Now, Limon and the wider Bramaderos project are in the south of Ecuador. You also have the El Palma project in the north of Ecuador. Can you give us a quick summary of where that's at and how you see that evolving?
Yeah, so personally, I'm very excited about El Palma. We went and visited only a month ago. Malcolm Norris, who's been the long-standing managing director of Sunstone and now executive director at Sunstone, was involved with SolGold when he was managing director of SolGold when they made the discovery of Cascabel, which is 50 to 60 kilometres away from El Palma, on the same fault system, this Toachi fault, and the same geological events that have contributed at Cascabel is evident at El Palma. It's a large gold and copper porphyry system. We've only touched the surface there. We've been drilling at surface targets at T1. And that itself is shaping up as a sort of stepping stone. Similar story at Limon, developing T1 as an open pit, which sits above deeper sort of porphyry systems in time with more drilling. El Palma is a very exciting large-scale development for Sunstone.
So when you put all these projects together, the exploration target, the resource, and then you say, hey, the company, as we sit here today, has got a market cap of $42 million. There seems to be a wild disconnect, isn't there?
No, that's right. The reason I was attracted to Sunstone, I saw these 2 projects and saw the potential, having done it before at Red 5 and previously when I was working for Xstrata and Glencore. I look at Red 5, we built a $1.6 billion project on the back of a single mine in Western Australia, and we've got two similar scale initial developments of both Bramaderos and El Palma, but they are just stepping stones to much bigger mining operations over the next coming decades. So, yeah, personally, I look at it, I think initially that's a $3 or $4 billion company if you get those two mines into development. But there's a much even bigger story once you do the larger scale porphyry developments, once you've got into operations and you've got a much stronger balance sheet to take advantage of that.
So drilling about to start any day, assays into July, you would hope that obviously there's probably a bit of tax loss selling. The stock's come off a bit, as have many other stocks in this space over recent months. I see, with at Ascent, there's probably some tax loss selling. By the end of July, that season will be over. That would coincide with, you would think, your news flow from the laboratory from this drilling. Hopefully, the drilling does what the trenching suggests it will do and returns more high-grade mineralisation. On that basis, you'd be hoping for a re-rate, wouldn't you?
Yeah, I'm very confident. We're now funded to do this next stage of drilling. And if you pick up Sunstock shares today, in 4 to 6 weeks, you will start seeing news flow coming from this drilling, which we're very confident, based on the trenching, that it will generate some exceptional results from this drilling in this next phase.
And some people call June, of course, the tax loss season, but you could turn that around too. Equally, it's the bargain hunting season for those who've got a few dollars and looking for some opportunities. At Ascent, as we say, at $42 million, you're giving them news flow based on drilling in areas where there's high-grade mineralisation. You'd have to think that when it comes to sort of greenfields and brownfields exploration, you're bang in the sweet spot.
Yeah, absolutely. I'm 7 weeks into the role, and I'm very confident we'll build a lot of momentum over the next 6 months. That stock is very cheap and it's a great opportunity to get in right now.
Well, thanks very much, Patrick. We've spoken on the Whole Truth podcast a couple of times to Malcolm, obviously a highly regarded geologist. As you say, he's credited with him and his team, that is now your team at Sunstone, with finding Cascabel, among others. He has got a great track record. He's obviously still driving the exploration program with you now as managing director. So you've both got a track record of creating value, and he's hoping history will repeat.
No, that's right. Malcolm's a legend of the industry, and I'm very lucky to be working together. We complement each other very nicely, and the team's very strong. So good times ahead for Sunstone.
Right, thanks for your time, Patrick.
Thanks, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personal